everything related to Bitcoin is about the halving. It's like our last hope, like in Star Wars. You're my only hope, Obi-Wan. So, although it's interesting, I guess today there's been an announcement of an approval for the ETH futures ETF. Mm-hmm. We can talk about that. And they punted on all of the Bitcoin spot ETFs. So yeah, interesting stuff. But let's go macro, and then we'll eventually wind our way back to crypto.
Oil buyers worldwide are currently confronted with some of the steepest premiums for supplies they have witnessed in months, and in some cases, even longer. This situation has been triggered by diminishing stockpiles at the largest U.S. storage hub, and its effects are rippling through various markets across Asia, the Middle East, and Europe. Flagship U.S. crude cargoes available in Asia are commanding the highest premiums seen this year. The spread between Brent and Middle East oil has surged to its peak since February, and the premium for near-term U.S. supply is nearing levels last observed in July 2022. At the heart of this scenario lies Cushing, Oklahoma, the pivotal delivery point for benchmark U.S. crude futures. These futures play a significant role in determining oil prices across the Americas and beyond. Inventories at the Cushing hub are currently just slightly above seasonal lows last witnessed in 2014. This situation is unfolding as the world was already grappling with a tight supply situation due to production cuts by major oil producers like Saudi Arabia and Russia in recent months. The U.S. had been helping to fill this supply gap, regularly dispatching over 4 million barrels each day to meet global demand. However, with overseas shipments and robust domestic consumption depleting stockpiles rapidly in the U.S., there's now a legitimate question of whether these flows will continue. As Gary Ross, a seasoned oil consultant turned hedge fund manager at Black Gold Investors LLC, puts it, we're running out of oil. You can see how low storage is at Cushing. If we're running out of Cushing, then we're running out in Europe because it relies on U.S. exports. If the U.S. exports less, then where is Europe going to get its oil from? Mark Yusko delves into the macro outlook for energy, particularly oil prices, highlighting the contrast between the U.S. and Saudi Arabia regarding oil projections. He also explores the realm of cryptocurrency, including the recently approved Ethereum futures ETF. However, he does express his reservations about such developments.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Oil rising, again, is rising for all the wrong reasons, right? It's rising for political means, in the sense that there's not rising demand. I mean, demand has recovered nicely. It has, but it's not accelerating. And what you've got is Saudi saying, we really don't care anymore about this deal that we struck with y'all. There's a good you plural, the southern version, the y'all. So I can cross, northern and southern, since I live in Chapel Hill 25 years. Can you believe that? I've lived down here 25 years. Oil, I think, is going to hit triple digits. I think the Saudis are intent on floating some more of Aramco, and they want to maximize the money in their pocket. And they do have full control at this point, because there's not enough demand to suck up their supply changes. So, I think it's going to be an interesting challenge. And let me restate that. It's the other way. The demand is solid, right? We're not in a recession. We're not having falling demand. And therefore, when they cut, which is what they said they were going to do unilaterally, then prices are going to rise. And then you got the bots and all that come in, and the futures market, which we will talk about futures market later. Futures market allows manipulation of price. And that has happened in the oil market for decades, gold market for decades. So same kind of thing happening. I'm going to take the under on the I word, in that what we're seeing is simple manipulation of oil prices to maximize revenues to the Saudis. I mean, that's all that is. And that's what's being reflected in quote unquote CPI. And yeah, that's bad for the incumbents in government. Super bad for the president, right? I mean, there's a perfect perfect inverse correlation between gas prices at the pump and presidential popularity. I mean, it's absolutely flawless connection. Anything over $2, your popularity starts to go down. Over $3, you're in trouble. And $4, forget about it. I mean, it's ugly. So if you can get below $1, I mean, you get elected no matter what you do. It's like the old Trump line, shoot somebody on Fifth Avenue and get away with it. Well, yeah, if gas prices are below $1, you can do whatever you want. So you know how I feel about this. I don't think we have inflation. Now, the one thing that I have to, correct myself on, I guess, almost like talking in the third person. It's ridiculous, but is back to cross-border. Liquidity is actually contracting. M2 went down for the first time in 90 plus years. I mean, actually contracted. So that is not something we've lived with in the past century, obviously. And so my whole point on it's just currency devaluation, stupid. It's not inflation, not you stupid, but the world's stupid. I still believe that, right? I still believe what we're seeing is the leftover effects from the idiotic, modern monetary theory pump of money supply post lockdowns. And I think that's what the oil dynamic is. Everything else that you see starting to go down. I mean, shipping rates and commodity prices are not rising the way people thought they would. And that ratio of financial assets to real assets is stubbornly stuck down at the trough. Everyone's been predicting for 2 years this great rally in commodities over financial assets, and it really hasn't happened. And I think it's because the growth is moribund, right? We're growing 2-ish% if we're lucky, and that is stall speed, right? That's not fast economic growth.
Valkyrie Funds LLC, an investment manager, has initiated the inclusion of Ethereum futures in its existing Bitcoin futures exchange-traded fund following approval from the U.S. Securities and Exchange Commission. The company announced this development on Thursday. The ETF, now rebranded as the Valkyrie Bitcoin and Ethereum Strategy ETF, is scheduled to launch on Monday. This marks a significant milestone as it will be the first time that futures based on Ethereum contracts become accessible to investors through an exchange-traded fund, representing a notable advancement for the cryptocurrency market. Valkyrie's chief investment officer, Stephen McClurg, shared insights with Reuters and emphasized the significance and potential impact of this development on the crypto market.
I texted to Pomp and Jason this morning, naked ETH shorts incoming. I mean, when you can go short an asset without having to own the asset, what doesn't matter what it is, whether it's oil, whether it's gold, whether it's molybdenum, whether it's Bitcoin or now ETH, that's a bad thing because naked shorting is not allowed in traditional spot markets. And spot is not exactly the right term, but in the stock market, you're not allowed to naked short. Right? You actually have to have the stock in order to short it. And same thing with a barrel of oil. In the olden days, if I wanted to trade you a barrel of oil, I had to have a barrel of oil. I couldn't just make up a little piece of paper that said, oh yeah, if I happen to have a barrel of oil on this date, I will get it to you. It's actually kind of BS. And I get it that financialization has some positives, but paper futures markets have a long history of enabling manipulation, and they make a lot of money for the people producing the paper and destroy a lot of people on the other side. So maybe I'm not as big a fan of futures markets as other people, but what is going to happen is large institutions now can short Ethereum the same way they shorted Bitcoin, November 21, right? Almost to the day of the peak. They approved the Bitcoin futures ETF and it got $1 billion overnight. And everybody's like, oh, that's so great. I'm like, well, think about it. for every buyer, there's a seller. And guess what? There can even be more bigger sellers on the other side pushing that incremental trade the wrong direction. And once that cascade starts, because of high frequency and because of the machines, those machines will just start chopping the bids. And it's just, history says it's not a good thing for short-term price. History says it's not a good thing for free and open markets because it allows people with large balance sheets to manipulate. And I use the term manipulate intentionally because they've paid massive fines. They, meaning these large institutions, have paid massive fines, like hundreds of billions of dollars, without admitting guilt. I always loved that part. How the hell do you pay $1 billion fine, but you get to say, but I'm not guilty? Just the fact that you paid $1 billion says that you're guilty, right? I mean, otherwise you wouldn't pay. And so that's just, it's kind of like lobbying. If a firm, and I can name names because they did this, JP Morgan, if they manipulate the price of gold, right? They spoof the price of gold and they make $20 billion of profit, right? That's all public information. That's wrong, right? That's illegal. But then they pay $1 billion and they're okay. I don't think that's okay. And so the same thing's going to happen here. Not necessarily them, but it could be them, but somebody or somebodies are going to come into the ETH market now, and they're going to get very short this asset because they have to take the other side of everybody who piles in long. And I don't like it personally.
According to a Bloomberg exchange-traded fund analyst, the market could soon see a flood of Ethereum futures ETFs launching on October 2nd. In a recent post on the social media platform X, Bloomberg ETF analyst James C. Fart highlights that 9 different Ethereum-based futures ETFs are potentially set to debut on Monday, describing it as an eventful day. These financial firms, including VanEck, Bitwise, ProShares, and others, are gearing up to introduce these ETFs. Fart also notes that some potential issuers, like Grayscale, have not yet submitted updated filings, and it's unlikely they will do so. He speculates that the early launch of these ETFs might be attributed to concerns about a possible government shutdown. Global investment manager VanEck, for instance, announced its plans to roll out an Ethereum futures ETF, which will solely invest in standardized cash-settled Ethereum futures contracts traded on registered commodity exchanges. VanEck aims to list this ETF on the Chicago Board Options Exchange. In September, VanEck mentioned that the ETF's effectiveness is expected to occur by October 3, 2023, or when the U.S. Securities and Exchange Commission accelerates the registration statement's effectiveness. What are your thoughts on the approved Ethereum futures ETF? Do you believe it could have negative effects, as highlighted by Mark Yusko? Feel free to share your opinions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.